What's up, beautiful people, and welcome to Drive to Thrive. In today's video, I want to take a look at some bonds here. Now, nothing has been safe this year. Everything has been getting decimated. It doesn't matter if you're in bonds, equity, cryptocurrency, or even precious metals. Everything has been getting decimated, but I think there is a bottom starting to form on these bonds, especially on a ETF called the TLT. So let's go over to the computer and let's take a look at these charts. Right, guys, so like I mentioned, nothing has been spared from getting absolutely decimated this year, and that is same with the bonds here. Now, usually when there is any kind of market uncertainty, when there is recession looming, bonds should usually do pretty good, as it's obvious here in 2008, 2009, you see this nice big spike. Then also during COVID crisis here in 2000, we ended up having a nice spike right here. But so far this year, bonds have been getting absolutely decimated. Now, from those all-time highs here down to where we are currently sitting, it's about 44% down. But as you can see on my chart, I have this green zone highlighted. Now, this is where I think a nice buying opportunity comes with bonds, and this is where we are currently, just sitting above. Now, I was lucky enough to pick up some bonds here about a week ago when we dipped down into this $95, but honestly, I should have bought a little bit more than what I did buy. Now, looking over here, we see that we have this resistance above us at around $120, which if we get up to there, from this current level, would be a nice return of 18 to 19%. And I don't think anybody would be unhappy with this, whereas bonds are a reasonably safe bet to begin with, again, other than this year. Now, for the low price target here, I'm looking at about $80. Now, going back to all the way to 2002, it seems like $80 was that ultimate low. And, looking at where we are currently sitting, we're definitely not too far away from that bottom. So zooming out of here, now we can see that on our monthly chart here, we have that stochastic RSI sitting flat at this oversold territory right here. So look for this thing to move back up. Our MACD is seeing something that it has never seen in the history of this ETF. We have this extreme oversold reading right now. And again, as with any time I see this kind of extreme reading though, I always expecting it to move back to the zero line and possibly, past here until it finds this, equilibrium again. So that's why I believe lots of upside for this stock. Now going over to our weekly chart, our MACD is in this bearish momentum, but looking to cross over and possibly make its way towards the zero line. Looking at the stochastic RSI, we have rotated off of this extreme oversold reading and moving into this overbought reading. So far looking good, and honestly, this is as far as I will go looking at the weekly and the monthly, because the rest personally I don't really think matters. I'm not a short-term trader, and as far as these bonds go, I will be looking to hold on to this ETF for next year or two, especially because they do pay a dividend of around, I believe it's 2.47%. So on top of your gains, you will be also getting some dividends, and you are buying it at a pretty discounted price here. Again, if I zoom out of here, you're pretty much looking at the prices that last time have been visited in 2011, so over 10 years ago. Now, that is it. Quick and sweet video here, guys. Let me know what you think. Are you going to be looking to buy into these bonds, or do you think I'm just crazy and there is more pain ahead? Let me know in those comments below, as I would love to hear your opinion. Now, thank you so much, guys. Enjoy your day and see you next time.